Definitely. All right, let's just keep this discussion going. Talk about the AI boom. Tech investor Roger McNamee joins us now. Always good to have you, Roger. I assume you've been listening to what we've been discussing at the desk. You know, first up, what do you think of OpenAI? Do you trust Sam Altman?
Not a bit. You know, I saw the prior segment where you were talking about Nvidia, and to me, Nvidia, the company, it deserves to be in whatever Hall of Fame we have for the technology industry, because, you know, you're talking about a company that's business is primarily hardware. They have a ton of software now, but it's primarily hardware, and they've gotten themselves to 75% gross margins on the back of generative AI and a whole bunch of other really important trends in Silicon Valley. And I like to distinguish, as you know, David, between stocks and companies, because right now the issue that Nvidia faces, which I think is going to be the issue faced by everyone in generative AI, is that the promise of AI has gotten way out in front of the results. And as Deirdre just pointed out, you know, Sam Altman would like to raise money at a $100 billion valuation off of $3 to $4 billion worth of revenue. And that may be fine. Investors may be totally comfortable with that. But somebody somewhere along the way needs to ask the question of, how long do we wait for enterprise applications to show productivity and value to customers? Because at the moment, Copilot seems to have some difficulties in that regard. I think there's a big promise at companies like Salesforce that they still have to deliver. And there are a lot of questions. And from an investor point of view, I think caution is increasingly going to be the watchword here, because it doesn't matter how good the chips are at Nvidia. If you're talking about replacing $1 trillion worth of cloud services compute over the next few years, I mean, the S&P 500, the companies are mostly run by finance people. I mean, the chances they're going to write off $1 trillion worth of capital investment just so they can buy Nvidia's new chips, I think that may be wishful thinking.
At the same time, Roger, you sort of mentioned sort of the keywords killer app, and that's what everyone is searching for. When you look at OpenAI, it's arguably the only company that has created a killer app in the age of generative AI, and it wouldn't be possible without Nvidia. So when you think about that, and yes, OpenAI has all of these well-capitalized, huge mega-cap competitors, do you think that in a world where there's only a few players, OpenAI could be one of them?
Well, Deirdre, you made the point earlier, though, that this may be a killer app. The amount of revenue associated with it isn't in killer terrain. It's in the really compelling, but wow. I mean, $150 billion or so has been invested in the infrastructure required to support these AI apps, and the total revenues are what? I mean, a tiny fraction of that.
Right, but Roger, you know how it goes. You know the Gartner cycle, right? The trough of disillusionment, and then it starts to pick up. That's what everyone I talk to is waiting for. They say you need to have a little more time here.
But Deirdre, let's remember, we've been watching this for a long time. Historically, the numbers were at most a tenth as big as what we're seeing in this category. So the risk we're taking is much, much greater. So time is going to matter. If you're wrong by a year, investors are going to be very unhappy about that. And
although
so,
unlike the 90s, which you and I well remember, and all the capital that went to all the companies that went out of business, I mean, here we've got this capital being expended by the largest companies. They're not going out of business, not even coming close. They can do this, and if you're right, they can still kind of move on.
I have no doubt that that's true, David, but they have enormous stock market valuations that are at risk. So, you know, I don't think the solvency of Microsoft or Google or Amazon or Apple is in doubt here. But there's no question that when you're spending whatever Microsoft's spending a month, roughly $10 billion, I think the number is, investors are entitled to have expectations for a rate of return on that that's commensurate with the risk that they're taking. And that it may be there, but that's the risk you're taking today, because the evidence is not yet overwhelming that they've solved the productivity problem in enterprises. In fact, the evidence is that they're not close. And if that's true and you have to wait another couple of years, you know, people might legitimately get impatient.